the first things first, we got some basic action here in the dollar. The dollar is weaker this morning. The US dollar is trading lower. What does that mean, guys? You should know this by now. If the dollar is weaker, assets like stocks and crypto are going to be higher. Now, the S&P is not that much higher. The spiders are barely trading up on the day, just a little bit. Last I checked, just over $1. Actually, right now, only 21 cents higher on the SPY. So again, what that does is it tells us that even with a sinking dollar, the markets aren't getting much of a bounce. And actually, this is something very important to understand. All right, I want to show you the charts here. What we're going to do is we're going to go into the charts. This is the dollar. All right, so basically what I want to do is look at this, right? And what we can clearly see here on the US dollar chart is that we had a down day, a small up day, and then another down day today. If we flip over to the SPY chart here, what we can see is that we had the down day and then a week up day when the dollar fell. Notice how we had a red candle here. Look at this. We opened here, and by the end of the day, even with a fall in the dollar a couple days ago, we did not have much of an up day. Yesterday, same thing. The dollar was a little stronger. The markets tried to fight, and they fell back down. Today, again, the dollar is sinking, and we're seeing the markets barely catching a bid. In fact, the S&P just went negative as I'm saying this. Now, the reason why this is important is that over the past years, and I mean, I'm literally talking years, the market has had an inverse relationship with the dollar. When the dollar falls, the markets rip higher. The fact that we're not seeing that here is very problematic. That's a problem. All right. So again, to me, that's a warning sign of issues to come. You guys know I continue to hold generally a fair amount of shorts on the market, and I continue to look for downside. Doesn't mean every day is going to be down. We're going to get bounce days. But ultimately, again, this is a market that is in troubled waters. We're basically entering a phase now where, yes, inflation's coming down, but not enough to get the Fed to step on the sidelines, let alone cut rates. And that is a major problem. All right.
Bitcoin bulls laid most of their options at $24,500 and higher for the March 3rd options expiry, and given the recent bullishness seen from BTC, who can blame them? On Feb 21, Bitcoin's price briefly traded above $25,200, reflecting an 18% gain in 8 days. Unfortunately, regulatory pressure on the crypto sector increased, and despite no effective measures being announced, investors are still wary and reactive to remarks from policymakers. Hello and welcome to Money Talks. In today's video, founder and chief market strategist at InTheMoneyStocks.com and verified crypto investing, Gareth Soloway updates about Bitcoin's current market standing, the final bottom in crypto, and his outlook for Bitcoin in 2023.
Bitcoin remains in this channel. Notice the channel here, guys. Now, notice Bitcoin is getting a little bit of an up move today. All right, that's a weak dollar response. That's normal. All right, now my issue here is that, number one, we have a defined major top at 25,200 to 300. So that's your line in the sand. As long as that holds, you have to be on the negative side of Bitcoin. It hit resistance. It's pulling back off resistance. The other issue here is, take a look at this. Basically, we had the 4 down days in a row, 1, 2, 3, 4. And then what's going on here? Let's draw a trend line in and put it in right there. That's a bear flag, an in spirit of bear flag starting to form. So when I see this pattern, what it tells me is that probabilities are now favoring downside on Bitcoin. Even if we get a little bit of a bounce here and there, as long as this pattern holds, essentially as long as price stays inside of this channel, you have to start thinking that Bitcoin has downside. Where's downside going to take you? The low end of the channel would be your first target. That's around 22,400. If that breaks, which, by the way, upsloping channels, if you look at a million upsloping channels, you'll see about 80% to 90% of them eventually break to the downside. Could be a month from now, could be 6 months, doesn't matter. The point is, an upsloping trend line 80 to 90% of the time will break to the downside. My guess is the break to the downside happens within 2 months, if not within a 1 month period. Okay, so that's your Bitcoin analysis. Again, Bitcoin right now chopping sideways. Again, reminder, that is a classic in spirit of bear flag. Bear flag by the name indicates that the probabilities signal downside coming. All right, let's talk a little bit about gold. Gold continues to bounce. I call this to a T. All right. So when we were number one, you guys know I've been bullish on gold for a long time. All right. But there was a point when we were up here on the chart of gold where I said to you guys, listen, I'm not advocating buying gold up here. Let it pull back. It's run too far. It's run too fast. No chart goes straight up, at least on a healthy basis, and no chart goes straight down on a healthy basis. So what do you want to do? You want to wait for a retrace to the scene of the crime. This is classic methodology from the Winning Trader series, available at verifiedinvestingeducation.com. And I teach this stuff. I teach all the ins and the outs there. But the bottom line is, look at the retrace and look at the level. Pivot high, choppy breakout, retrace to the scene of the crime. That was your buying opportunity right there.
For instance, on Feb 23, U.S. Securities and Exchange Commission Chair Gary Gensler claimed that everything other than Bitcoin falls under the agency's jurisdiction. Gensler noted that most crypto projects are securities because there's a group in the middle, and the public is anticipating profits based on that group. March 1st comments from two U.S. Federal Reserve officials reiterated the necessity for even more aggressive interest rate increases to curb inflation. Minneapolis Fed President Neil Kashkari's and Atlanta Fed President Raphael Bostic's comments also decreased investors' expectations of a monetary policy reversal happening in 2023.
I still believe gold will be the best performing asset. All right, I talked to you guys via a post on Twitter recently about where I expect the chart of the S&P to go. All right, over the next 12 to 18 months, I'm anticipating a drop on the S&P 500, another 22% to downside to this long-term trend. Now, you'll have big bounces along the way. Don't go and misconstrue what I'm saying. I'm not saying that we're going straight there in the next 3 weeks. I'm saying that over the next 12 to 18 months, we are going to meander down to this level down here. All right. And again, that's right around 3,000 on the S&P 500. So what that means is that S&P is going to underperform. If the S&P is underperforming, you better believe that Bitcoin is going to struggle as well. It's a risk asset right now. All right. Yes, I do believe there'll be a pivot point where it becomes more like gold. That's not yet. We still have to wait for that to happen. Probably coincides with regulation and bigger money starting to feel comfortable getting in the crypto space. But bottom line is, if we head down here, assets across the board are going to go down. I do think gold would gain traction, though. Gold is a safety asset. It's also an inverse dollar play. The dollar at some point, and we're starting to see it now, starting to weaken, and the markets are not rallying. There's going to be a point where the dollar is falling, and this is the scariest of all. The dollar falls, and the markets fall too. That's the worst case scenario. That's telling you we're in a very bad recession when that's happening. And even with lower rates, and this is the key, even with lower rates, what that's telling you is that the market doesn't believe that the recession will end, meaning the Fed has lost control. And that is the worst case of all scenarios, where the Fed loses control. Okay. Tesla, guys, is having an investor day today. You do have a little bit of bullish consolidation right here, so you have to be a little bit careful. I do ultimately think you're going to head back down to about 144, but there is a chance we have one more move up on Tesla to about the 225 to 230 level. There's this long-term trend line right connected right through here, where that would be your upside. In addition, notice the downsloping trend line around 260. Those would be your two levels of resistance. I'm a big fan here of waiting. Let's see if we get one more push up in Tesla, and then I think you short it. All right. Elon Musk is a visionary. There's nothing to take away from him in that respect, but we've seen self-driving having issues. We've seen the fact that 99% of all revenue from Tesla is from car sales, which makes them a car company, which then you have to value them on the same levels as a Ford and a GM and some of these other ones. And remember, Ford is switching over to all electric. Heck, I even saw an Acura commercial today for their new electric vehicle. A competition is here. Their valuation has to come in. As much as people love them, it's got to come in. So again, I think on any pops, I'm going to be looking to continue to look to short this with a target probably downside of 144 right now, maybe even lower.
The stricter stance from the macroeconomic and crypto regulatory environment caused investors to rethink their exposure to cryptocurrencies. Nevertheless, Bitcoin's price decline practically extinguished bulls' expectation for a $2,400 or higher options expiry on March 3rd, so their bets are unlikely to pay off as the deadline approaches.
So, as a trader, you have to remember that you're going to be wrong. The retail crowd and a lot of it, and listen, I was like this in the beginning. And listen, for years I was like this, where I would be like, oh, that's a great spot on this trade. So, or on this stock or on this crypto or whatever. So I'm going to go put all the money I think I'm going to need into this trade at that point. And ultimately, I'd find out that I was wrong quite a few times. And the key was I didn't have the money because I put too much in. I didn't have enough money to maneuver and trade around the position. Okay. So again, the key is that by doing this, folks, by dollar cost averaging, by starting small, by really it's a mentality change. Stop your mind from thinking it's a no-brainer winner. And every time you take a position, assume you might be wrong. And by assuming you might be wrong, you're not going to put a ton of money in, I guarantee it. And that's going to change your whole ability to maximize profit by trading. I became a 10 times more profitable trader when I made that mentality switch. And so it's really a mindset. It's not the cocky mindset of, oh, I just want to double, triple, quadruple my account in a month. It's the mindset of, I may be wrong. I've been burned many times. So let me start small. And that actually increases your overall profitability. Very cool stuff, guys.
So, what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.